In the currency quadrant, the Japanese yen moved up 1%, strongest up move since August, and we now have another up week, so that's 3 of 4 in the Japanese yen, and actually the week was negative until this 1% move today, so all of the week made up today and then some, giving us that 3rd out of 4 up week. 95.13 was the high print on the Japanese yen future, closing closer to 95.05. It's a flight to quality move, not a flight to safety, but a flight to quality. More tariff-driven flight to quality moves happen throughout the markets, and the yen is one of the biggest recipients of that in the currency market after China announced varying degrees of levies, tariffs on U.S. goods coming into China, 75 billion worth, including 25% auto tariffs, 5% on agriculture, on specific targeted tariffs on U.S. crude oil. Money flew into the Japanese yen, which again is a flight to quality move. Japan really will get hurt by continued China slowdown, but overall the Chinese government isn't likely to have any sort of monetary policy changes based off of this, where the U.S. might, China certainly will. And then lastly, volatility jumped. The volatility, implied volatility percentile is now up at about 70%. That means that the Japanese yen volatility is higher than 70% of the rest of the time today. Now, what that potentially means is, and what we're hearing from clients of ours, is that they're now looking at selling calls and call spreads up above in the Japanese yen here in the CME futures and futures options. Those particular strategies are usually imposed or implied into the market when volatility is high, and seeing that we're at the 70th percentile volatility for the Japanese yen for this year, you'll start seeing some of those moves happen. The calls are definitely skewed as the Japanese yen continues to rally, so you might see some selling of calls and selling of call spreads here at the CME Group.